All right. Good morning, everybody. Today we are talking about building and scaling your business, and this is lesson 2 of the series. This is all about the numbers. So this is all about understanding your KPIs. So as a business owner, I can tell you that one thing we really want to understand on a daily, weekly, monthly, yearly basis is what our numbers are, what our goals are, and what numbers have to happen or what numbers have to be there in a year to be able to reach our goals. So as you stop acting like a real estate employee and start acting like the CEO of your company, it's going to be important for you to forecast your KPIs as well as understand what has happened over the past. So that's what we're going to be talking about today. So measure what matters in real estate. So the goal is to help you guys understand, track, and act on key performance indicators, KPIs, to grow a predictable and profitable real estate business. And I can tell you, any business that is currently in business and has been doing well understands their KPIs in some form or fashion. Now, you can get really fancy with your KPIs. There is an infinite number of possibilities that you can look at. We're going to look at just a few here, but really start to think outside of the box and figure out what you can measure in real estate. So, what are KPIs and why do they matter? So KPIs are key performance indicators, and these are measurable metrics that show how well you're doing in reaching your goals throughout the year. If you don't measure it, you can't manage it. And there is nothing more true than that statement. If you don't measure it, you can't manage it. Top agents run their business like a business, and they know their numbers, they adjust their behavior, and that in turn improves their overall results. So some core real estate KPIs that you should be looking at. So your number of conversations that you have about real estate in a day, number of leads generated per week, number of appointments set by those leads and conversations that you're having, number of contracts that you sign, whether they're buyer or seller, listings taken versus listings sold. I don't know if any of you have, but I have been asked in the past, what's my conversion of listings taken versus listings sold? So sometimes clients will want to know, what is your conversion rate? What is your, and you think of this in baseball terms. A baseball player, they know out of every pitch that is thrown, how many times they hit the ball. So think of it that way in real estate. You need to know your closed transactions, whether that's an average per month or whether that's an average per year, your average sales price, your gross commission income, your cost per lead, and your marketing ROI, and your conversion rates at every stage. These are super important factors for you to know as a real estate professional. So if you've been in real estate for a while, you can easily track this by going backwards and digging into your data. If you're a new agent, then you can start tracking this now on a smaller scale, say month by month, and then you will have some data to move forward to be able to set your goals. All right, so let's talk about the KPI funnel. And I have this cute little diagram here for you as a visual aid. So some questions you should be asking yourself is, how many leads turn into true conversations? How many conversations turn into appointments? How many appointments turn into offers? How many offers turn into accepted contracts? How many contracts turn into closings? And how many closings turn into a referral? That is your KPI funnel. You need to know the leads, the conversations, the appointments, the contracts, the closings, the referrals. And as you can see, as we go down through this funnel, the funnel at the top is very large. It's a very wide net, and then it gets smaller and smaller and smaller and smaller as you go down. Why do we need to know how many leads turn into true conversations? Because we need to know how many valid leads that you are getting in a month. How many conversations turn into appointments? So you need to know, out of those leads that you've received in the past, how many people are actually meeting you? And how many appointments turn into offers? Out of those people that have gone and seen homes, or that you've been to their home to look to potentially list it, What is the percentage of appointments you're converting into actual offers or listings? And out of those offers and listings, how many accepted contracts are you getting? All of these things are going to tell you how well you're doing at converting business, because we think about converting business as just, okay, we have a lead here, somebody who clicked the button online, or somebody who called into the office, or somebody you met at a grocery store is a lead. And then we think, okay, well, our conversion rate is how many closings we have, but that's not it. So when you really start to understand your KPIs, there's conversion rates at each step. And I can tell you that they're not all the same. So generally speaking, nationwide average, internet leads converted about a 5%, but that goes from lead to closing. Did you ever break it down and think about it in its smaller form? Is if you get a lead, how many times are people picking up the phone? If that conversion rate is super low, say 0.5% or 1%, that's going to tell you as a business owner that a system is broken. Does that mean that you're not calling enough? Does it mean that you're not calling quick enough? Does it mean that you're only calling and not texting, that you're only calling and texting and not emailing, that you're only calling, texting, emailing, but you're not sending something physical to the property? Maybe once you've called those couple times and you've made those initial touches, maybe you're never calling again. Maybe, the next month rolls around and you have just forgotten about this lead. So knowing your conversion rate at each step in the process will really help you as an individual or as a team lead understand what's happening in your business and where the business is falling through the cracks. So it's super important to track every step of the process. So when you get the lead, what's the conversion rates to conversations? What's the conversion rates to appointments? What's the conversion rates to the contract? And how many of those contracts fall out before they hit closing? Now, another step that I want you to think about is at those closings, how many of those closings turn into future referrals? And that's a step that we often forget, because referrals are the easiest to convert. So think about it at each part of the stage. And I do challenge you guys to start tracking this and start tracking this very closely. All right, so let's break down KPI math, and we're going to make it easy. Like I said, there's 100 different things, 100 different metrics that you can measure, but we're just going to go over a few examples. Okay, so if you want to know what your lead conversion rate is, you are going to take the amount of appointments that you do divided by the amount of leads that you get in a month. Okay, so your lead conversion rate is just how many appointments versus how many leads. All right, and that's going to tell you what your lead conversion rate is to appointments. But again, remember, there are steps. There are steps in between, but we're just talking about how many appointments. So appointment conversion rate. So out of the appointments that you got for that month, you take the amount of signed clients, whether buyers or sellers, divided by the number of appointments. And that's going to tell you what your conversion rate between real meaningful appointments versus actual signed contracts. Your client conversion rate is the amount of closings you've done divided by the amount of signed clients you've had. So that is your client conversion rate. If you want to know what your average commission per sale is, and this is super important, you're going to take your GCI and you're going to divide that by the number of transactions that you do in a month or a year. And then if you want to know your cost per lead, we're going to take your total marketing spend divided by the number of leads you receive in that time period. And don't worry, we're going to give you examples. Again, there are KPIs for everything. Here at the office, we track our KPIs with our leads very closely. We want to know how many leads did we receive from each lead source. We want to know what the average cost per lead is from that lead source, what the average cost is over all lead sources, what the individual conversion rate is on each individual lead source, and then what the conversion rate is overall. We also track which agents are converting at a higher or lower rate than other agents based on the number of leads that they have received. So these are definitely something like, depending on where you are in your business, if you're looking for, marketing, if you're looking to get your average closings up, if you're looking to get your average commission up, these KPIs are all things that you can do to improve in wherever your business needs help. But first, like I said, you have to understand the data. So let's take a look at an example here. So if I have an agent come to me and says, I want to make $100,000 in real estate this year, this is the process that I would take that real estate agent through. So to figure out how to make $100,000 in real estate, we have to know some data first. So we know what the desired yearly income is because they told me they want to make $100,000. So I need to figure out what is their average net commission based on historical data or their local market area or their sphere of influence or whatever that the case may be. What is their average net commission? Okay, so I've given you two examples here, two different agents. So the agent on the top has a lower net commission. So this agent in this example makes $23.81 per average closing. And example number two is a different agent who has a higher average net commission, and that agent makes $5,556. So knowing this data, that the agent on the top wants to make $100,000 this year, and their average net commission number, the amount of their take-home pay is on average $23.81. Just by doing some simple dividing, I can tell you that the top agent needs to sell 42 homes that year to make $100,000. Meanwhile, in contrast, the agent on the bottom, if you can see, only has to do 18 to make the same amount of money. So this is a comparison that I always do side by side. So there is some adjustments that this agent can do to their business. If they're okay with their market area and their average price point and charging clients what they charge them, then 42 closings is what we're looking at. And then we move on to the next step of how do we increase your number to 42 closings. Where the agent on the bottom only had to do 18. So there's another avenue. For this agent's business, we can increase the average commission. And you can do that by either one, charging your clients more, or two, moving into a higher price bracket of sales. So we always talk about both of them. But without having this data, we wouldn't be able to properly discuss how to make adjustments in this agent's business to be able to get them to that $100,000 a year mark. So it's important, again, to do the rudimentary numbers and to track your numbers for your business so that you're able to make adjustments along the way. So I'm going to dig deeper, and I'm going to say this agent wants to stay in the price range in the neighborhood that they're doing. They don't want to charge their clients anymore. They're fine with the $23.81 per transaction. And we're going to move on to figuring out how to do 42 closings per year. All right. So the next question is, how many deals do I need to close each month to hit this goal? So we've taken a broad year goal and we're breaking it down to a monthly goal. So to do that, it's very simple. You take the total number of closings divided by 12 months. And if we're taking 42 closings divided by 12, that equals 3.5 closings. Okay, you see how we're kind of chunking this down? 42 closings sounds like a lot, but 3.5 closings every month is very obtainable. And yes, I know it's 3.5. So we're assuming that an agent is going to sell 3 to 4 closings every month. So just keep that in mind. Let's take it a step further. Okay, I want to close the 3 to 4 deals every month. How many people do I have to connect with to achieve this goal? So then let's back it up even further, because now to be able to figure that out, we need the conversion rate. So we were talking about the conversion rate. How many leads to appointments do you need? Okay, so how many of your leads are turning into appointments? So again, you have to know these basic numbers. So we go through this scenario with this agent and we find out that they have a 7% conversion rate. So out of all the leads that they are receiving, 7% of them end up in a face-to-face appointment. So knowing this information, we can take that conversion rate and work it backwards. So to figure that out, That just goes 3 to 5 appointments divided by 50 leads equals our 7% conversion rate. Okay. So again, tracking this is very important. And how do we track this information? Does anybody have any idea on how you can track this information other than pen and paper? No? Nobody? You can do it in your CRM. This is part of what a CRM is for. Your CRM allows you to track all of the leads that you've received, how many conversations you've had with those leads, if any, how many appointments you've had, how many offers you've written. It's a really great way to track your data. And that's why so many, top producing agents as well as businesses, because there's CRMs for other businesses outside of real estate. It's not just us. They have CRMs for every business on the planet almost. So it's really important to put that data into your system. Okay. So 7% conversion rate. Let's look further. All right. So if that's the case, I want to collect 50 leads a month. And how much do I need to spend to achieve that goal? So let's talk about our marketing spend. All right. We talked about our marketing spend at the beginning examples. Marketing spend divided by number of leads equals your cost per lead. So if you need to know how much your cost per lead is and what your budget needs to be, you can work this frontwards or backwards. So if you've done the data and again, we're talking about all lead sources, whether these are Zillow or Realtor.com or Google AdWords or social media leads or wherever they're coming from, you need to figure out what your average cost per lead is on all sources so you can figure out what your monthly budget will need to be and how many leads you should be getting off of your monthly budget. So assuming that all of your leads cost about $90 per lead, and that's assuming that you're being frugal and not just shoveling money to Zillow, because Zillow is about $140 to $150 per lead. They're the most expensive. But let's say that you're being frugal and you're diversifying your lead generation and they're coming in at $90 a lead. So that means to get 50 leads, you're going to have to spend $4,500 a month. Okay. And that sounds extraordinarily large, right? It sounds extraordinarily large. Don't let it scare you. I'm not telling anybody to run out and spend $4,500 a month, but this is an example of how to get 50 leads in a month at $90 a lead. But what we have to look at before you start spending money on leads or spending money really on anything is your return on investment. We need to know if it's going to be potentially profitable to spend that money. Remember, we're business owners, we're CEOs of our business, so we need to know whether it's going to be profitable. So comes to my final calculation is what is my ROI on my lead spend? If you don't know what ROI is, it is return on investment. Return on investment is your ROI. Any type of investor on the planet will want to know what their projected ROI is. So if you've ever worked with an investor who's buying a property to flip or a rental property, you have heard the term ROI more than once. They are going to want to know if I'm spending $1 on this property, how many cents or how many dollars am I getting in return? What's going to be my return on my investment? Because if I put $1 in and then my dollar loses value and now my dollar is only worth 50 cents, well, then I'm not going to spend the dollar. I'll keep the dollar. So that's just in essence what return on investment means. So to calculate your return on investment, you have to take your net profit divided by your total investment and times that by 100. And this calculation will work not just for your real estate marketing budget, but for really anything that you invest in. Okay, so let's look at our total investment. So we have a $4,500 a month lead spend times 12 months. That's got you spending $54,000 on lead gen in a total year. Now we take it to the next step and we need to figure out what our net profit is. If we know, because we ran the numbers, if we know that if we spend $54,000 in a year to garnish 50 leads per month, and we know our numbers, so we know that the potential of the conversion on those will garnish us $100,000 gross commission income within that year. Now we need to figure out what our net profit is. So if we take $100,000 minus $54,000, which was the cost of the leads, that puts you at an overall net profit of $46,000 for that year. Okay. And now let's look at the ROI. So if we take $46,000 divided by $54,000, which was the initial investment, the ROI on the lead investment is 85.19%. So you have 85% more income than you traditionally would. Now, I know what you're saying, but you made $100,000. Don't forget that you have to subtract off what your costs are. So if you're talking about a well-operating business, that looks like your profit and loss statement. This is how much we brought in. These were our costs to operate our business. This is what we have left at the end of the year. So if you're spending $54,000 on leads, your income off of that is $46,000. All right. And we're just talking about leads here, not general organic business. $46,000 off your leads. That's your ROI. Does that ROI work for you? Well, it's subjective. It depends. It just depends. It depends. Each individual person is very different. And that's why KPIs are so powerful. Because what may work for me, and I would say, okay, well, that's an 85% return on my money. That's a great deal. May not be a good standard for anybody else. Or maybe, a 50% return on investment is great for you. Only you can answer that question. But knowing the math, knowing what the KPIs say, will help you make an educated decision on where to spend your money and how. It's also going to tell you how to project your income for the end of the year before it happens. Questions on those calculations? No? Is anybody using any similar lead metrics?
I wish I was.
Well, you will now. See, you will now. And like I said, KPIs are super, super easy. They're really easy. If you struggle with math, what I would suggest that you do is ChatGPT can be your friend. It really can. Go into ChatGPT and say, my net income last year was, X amount of dollars. I want my income to be this amount of dollars. My conversion rate from lead to closing is this percentage. Knowing this data, how many more closings do I have to have this year? How many more leads do I have to have this year? And show me the formula. And it will pump that out for you. So don't be afraid to use tools like ChatGPT to help you understand KPIs. Like I said, it's a business operational thing, but I think it's very powerful for agents. I know when I was running a team, I still tracked my KPIs because that helped me understand where we needed to grow. It helped me understand when I needed to hire. It helped me understand my budgeting for that month or that 6-month period, depending on who the lead source was. It also helped me understand where to trim the fat in my business. So if I was spending money on something and it really wasn't working, my KPIs told me that. And a lot of this information you can plug into an Excel spreadsheet. And as long as you have the calculations and the formulas in there, as you're entering the data, then it will automatically update your percentages and all of your KPI data. So if you set it up the first time, it will work for you. And that is what I did. I had my CRM, that's where we tracked everything. And then I was able to take the data from my CRM in a report, plug that into my Excel. And then it was almost like an investment pro forma. It pumped me out what we were doing. And historically, month after month after month, year after year after year, I could follow what our numbers were so that I could say, okay, well, our numbers are down here. Like our lead conversion is really down. So what has changed? Has our systems changed? Has our processes changed? Did we maybe, did we have an agent that was really good at converting leads leave? And maybe did we make the wrong hire? And we have an agent here that's really, not good at converting leads. Or do I need to pump more time into training, the people that I do have to make them better at it? So that's kind of how a business kind of shifts and grows. But you have to have those numbers to understand it. So here's some actionable insights. If you're struggling with conversions, you can adjust your scripts, trainings, or follow-up speed. But again, you don't know if you're having trouble converting based on the national average or based on your previous year's numbers if you're not tracking the data. If you're not hitting your income goal, can you reverse engineer the number of clients you need? You're not hitting your goal. Does that mean that that means that you don't have enough clients, which means you didn't do enough appointments. And if you didn't do enough appointments, it means that you didn't have enough conversations. And if you didn't have enough conversations, it may mean that you don't have enough leads coming in. Or maybe you had enough leads, but you're really bad at starting conversations. So this is what it's going to tell you here. You'll be able to spot what's not working rather quickly. If you're spending too much on leads, you need to optimize your marketing channels, set up new marketing budgets, or even earn passive income by referring leads out. That's a big thing that a lot of agents don't do who are spending money on branding, marketing, and leads, is they're not creating passive income by referring out leads that are outside of their area, or maybe leads that they're really just not connecting with. All of you should be able to garner passive income off of that by referring those out. Let's see, there's a little tool on there for you, which is AI KPI Tracker on Google. You can use that if you like. I've always used a spreadsheet, but it is a tool that's available. I kind of looked it up, looks kind of cool, so feel free to check that out. All right, KPIs and the CEO mindset. Think like a CEO, not like a salesperson. So that is where most people trip over themselves. Well, I'm a real estate agent and I work for Realty One. That is true. That's true. But you are an independent contractor. You can run your business like the CEO of your business, or you can just be a salesperson that works at brokerage. The choice is up to you. Your business is a machine. KPIs show you what's working and what's broken. And CEOs just don't work in their business. They work on their business. And how we work on our business is by using the data. We use the data to improve our business. If we don't have the data, we can't improve it. So tracking your KPIs leads to better time management, smarter money-making decisions, and scalable systems. So those of you who want to grow your business and add additional people onto your downline, whether that's through referral agents or buyer's agents or full-blown teams, you have to understand your KPIs and your metrics to be able to create a scalable system that will be successful. Or else you're just going to be throwing money at a wall and not having any additional revenue come back around. All right, my final thoughts. Hope is not a strategy, and the numbers don't lie, they lead. All right, give me your thoughts. Anybody going to track their KPIs? Or is everybody just bored because it's math?
I wish I had a little work elf that would just do it for me.
Well, I mean, it's really, I promise you, once you put the spreadsheet together to help you track, it would take you 15 minutes a month to be able to plug in that data. It's all about setting up the systems so that it tracks the data for you in the background. But understand that tracking the data also means that you have to look at the data and digest the data, you know. So it is important as a business owner that you take a moment to do that. Anybody else tracking their data? Does anybody track their conversion rates? No, nobody's tracking their conversion rates. That is the first thing that you should be doing, is tracking your conversion rates. This is what helps you grow. Please, 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 if you do nothing else, if you track nothing else, please track your conversion rates, leads to closing at least. Like I said, I would love to see each one of you track each step in that funnel that we talked about, each one in that funnel. Let me go back to it here. But if you start small, track your leads to closings. It doesn't matter if you are buying leads, if you are on our lead program, if you were just really good at generating leads on your own. Track your leads to closings. And if you are using any type of CRM, that's super easy to do if you're putting each person's data in there. You can do a search that says how many new contacts did I enter in the month of July? And it's going to pump out a number. And then you can go back and say, okay, how many closings did I have in the month of July? And that's a super easy conversion from your leads to your closings. And then you can work off of that and you can start working backwards and saying, okay, out of that closings, how many contracts did I write in the month of July? And to do that, you can go right into your SkySlope forms, insert your historical data, how many contracts. And then once you know that, check your calendar. If you're using your calendar for your appointments, how many brand new appointments? So start working it backwards. Find your leads to closing conversion rate, and then start working backwards up through that funnel to figure out everything else. Once you have that information, I'm telling you, something powerful will happen. You will start to really get excited about those numbers. And then it's just like it clicks and it's like, okay, here's my shortfall. My conversion rates are pretty good until we hit this part of the funnel. So then you're going to be more aware and more conscious of what you're doing during that step. And that is going to lead you to the answer of where your shortfall is. So, all right. Any other questions about KPIs? You guys are quiet today. No? All right. Well, we'll be back next week. We're going to be talking about managing taxes and expenses. This is everybody's favorite topic, managing taxes and expenses as a real estate professional. This one I put in by demand. A lot of people ask me this. Disclosure is on there. I'm not a CPA. I'm not a wealth manager. So definitely you want to go off of what your accountant is telling you. This is just about overall experience and how I do things. So definitely make sure you always talk to a tax professional. But I will see you guys back again next week for lesson 3 of this series. And of course, like always, I will be on the line, just quiet, if anybody has any questions or wants to discuss anything that they didn't want to discuss as a group. Thanks so much, guys.